Hello, welcome to Smart Investing with Philippe. I've been on holidays for the last few days, so sorry if I didn't make an update for the Monday and Tuesday, but now we're going to go through the specific earning of AMD, and what a good earnings session it was. We're going to go through the fundamentals, we're going to go through the business line, you're going to go through why I think this is an amazing company for the next 5 years or 10 years. And I'm going to through the base case, the worst case, and the best case scenario, where I think I see the share price going to be in the next 5 years for AMD. I think AMD is a tremendous opportunity. So if you want to really enjoy this tremendous opportunity with me, please subscribe, like, and leave a comment. Let's go straight into the presentation. AMD, you have to understand the AMD business. The AMD business, first of all, is a 3 different line of business. The first one is data center, which is the one that I think is the most important and scrutinized by many analysts on Wall Street, because it's mostly AI driven and the AI growth story that we are hearing nowadays in the market. Second segment is client and gaming. And the third one is embedded, is an industry broadest portfolio of adaptive embedded computing platforms, and is also a very important segment for AMD going forward. So what is more important as well what is also important to highlight is that AMD acquired ZT System Solution to actually become a world-class silicon and software system design to deliver rack-scale AI solution to go against NVIDIA. And they want to compete straight on with NVIDIA over the next 5 to 10 years. So this is a long-term story and competitive story, and I think nothing is set in the stone, and I think AMD has a lot of growth potential going forwards. So when it comes to revenue, I mean, this is excellent. You've seen the revenue growth over the last year, the same quarter last year is a 36% year-over-year increase of revenue. I mean, it's just also this rapid growth just before even the MI 350 microchip is even released. So just imagine what will happen when this MI 350 is going to be released by the mid of 2025, which means in one quarter. It goes from 5.5 billion to 7.5 billion. It's just an amazing growth of revenue, And revenue of 36% is just amazing. Gross margin is also increasing a bit. And it's also a good news that gross margin is increasing. It's going from 47% to 50% on a GAAP basis. And on a non-GAAP basis, it's 52 to 54%. Again, excellent news. Operating income, what a banger, what an increase of income, operating income. It goes from flat in Q1 2024 to almost close to 1 billion, 1 billion operating income. Non-GAAP is 1.1 billion to 1.8 billion. Again, fantastic increase of operating income, no doubt about this. Diluted earnings per share, Q1 2025, we go from 0.07 to 0.44. It's a massive beat, massive beat of EPS. I mean, what can you say about this? This is excellent. On a GAAP basis, 0.07 to 0.4, and the non-GAAP basis, 0.62 to 0.96. Okay, what is very important and what is actually most important for AMD and for a lot of Wall Streeters and a lot of analysts out there, is the data center segment, because it's all the story about AI and AI infrastructure and so on, and AI spending. You can see that the revenue for the data center segment go from 2.3 billion to 3.7 billion is a 57% increase year over year. And the operating margin has increased also by 2%. And operating income is about 1 billion versus half a billion a year ago. I mean, this story is just an amazing story, And it's even without the release of the MI 350 chip, And it's going to accelerate production. They say here they're going to accelerate production of the MI 350 to begin accelerated production by mid-2025. So that's mean by the second half of the year, we're going to see an increased growth of AMD. I mean, just be sure about this, The AMD is just starting to grow. So the segment of client and gaming is going from 2.3 billion to 2.9 billion. It's quite a good increase of 28% year over year. Operating margin goes from 10% to 17%, and the operating income is about $500 million from 237 million. I mean, again, the gaming segment, we thought that it will be all dead last year, but you can see it's not dead at all. It's still growing, and it's starting to grow again. It's very cyclical in nature, so the growth is starting to come back into the client and gaming segment also of AMD. And now if we talk about embedded solution, this one is about 1 billion revenue. is down 3% year over year, primarily due to the mixed end market demand. And operating margin is pretty flat. It goes 1% down, and is about operating income of 328 billion. But I think it's going to grow, you know, because this segment of embedded tech, this segment of business of embedded is actually the one that we think is going to grow in the next few years, because there are a lot of partnership with AWS, with all the big companies, with the big scalers and so on and so on. So basically, this is one that I think is going to grow as well, you know. So overall, the three segment of business of AMD, whether it's a data center, whether it's gaming, whether it's embedded segment, is all growing double I digit, you know. So the financial outlook for non-GAAP revenue, that's the guidance, huh? That's what it means. Financial outlook is the guidance of AMD during the call, what they give, you know. So basically, they expect a revenue of 7.4 billion plus or minus 300 million. So that's mean regarding what the mentality of the CEO of the company, she is more on the cautious side always. So they expect a 7.4 billion revenue plus or minus 300 million. So probably it will hit 7.7 billion. Gross margin of 43%, including a 800 million inventory charge, and 54% if you exclude this one-time charge, you know. Operating expense about 2.3 billion, and effective tax rate. So basically, they expect a diluted share count of 1.64 billion share. Q1 2025 summary. So last time they guided about 7.1 billion plus or minus 300 million. They deliver 7.4. So now they're actually guiding 7.4 billion, up 36% year over year. So that means they will deliver 7.7 billion, you know. That's what data segment revenue is about 3.7 billion, up 57 year over year. Gross margin 50%, non-GAAP gross margin 54%, diluted earnings per share of 0.4, non-GAAP diluted 0.96. So it's a significant year over year revenue and EPS growth driven by higher AMD Instinct and EPYC and Ryzen processor sales. So now if you look at the balance sheet specific, I've graded a A. I mean, definitely from last quarter, sorry, from last year, the same quarter, you go from 5.4 billion to 7.4 billion. But for the last quarter, is a slight decrease, but you have to compare always the same quarter because there are some cyclicalities into the numbers. They actually increased slightly the cost of sales, amortization and so on. They also slightly increased. Total cost of sales slightly increased. Gross profit 3.7 billion, much higher than last year. Last year, the same quarter, gross margin 50%, also higher. Research and development, they increased, which is a good news because you want this type of company to do research and development. Marketing, general administrative is also increasing, which is normal because they are increasing sales. So generally, all the marketing and general administrative is increasing in line with sales. So total operating expense 2.9 billion from 2.5 billion, which is quite a limited increase if you compare that. The net revenue has increased by almost 50%, you know, we talk about 29%, but here you can see total operating income has just slightly increased by 400 million, you know. So that's actually giving an operating income of 806 million from 36 million. So much better than last year. Net income 709 from 123. Huge increase of net income. And of course, the diluted earning per share is 0.44 as opposed to 0.07. So you see, just a fantastic balance sheet. The only problem, you know, is if you have to criticize AMD, is that you see they have a net income of 700 million from a 7.4 billion. It's only a 10% net income margin. And that's not high enough for a tech company like AMD, but I think it will increase over the year, you know. So you shouldn't be too worried about this net income margin. But of course, you get a gross income margin of 50%, then you go down to the 10% net income margin, which means that there is still a lot of cost cutting that they can do, a lot of improvement on the cost structure basis that the company is actually operating on. But overall, it's still a very good balance sheet and there is nothing to worry about. If you look now at the balance sheet, I mean, you can see that AMD is a 7 billion of cash equivalent and short-term investment. They could actually pay off all the debt if they want, you know, because the current liabilities, long-term debt, for example, is about 3 billion. 5 billion. So you see, they can pay off all the debt if they want with the cash equivalent. But of course, they don't do that. Why? You would say they won't do that because, of course, you need to have a bit of leverage to increase the operational performance of the company. If you have no leverage at all, then it's very hard to make your return on equity or return on investment being leveraged and to being optimized with debt, you know. So it's healthy debt level, you have enough cash. And what is also amazing, you have a total stockholder equity of 57 billion, you know. 57 billion of total stockholder equity. out of total liability and stockholder equity of 71 billion. So huge stockholder equity value of the company. I mean, if you look at the AMD now, is more or less 160 billion, and you have 57 billion of equity stockholder value on the balance sheet. It's just amazing, you know. So what is the bear case scenario for AMD from 25 to 2029? So it's a 5 years expected horizon. If you look at revenue growth of 15%, and you look at the net income margin of 25% increase to 30%, then what is the share price estimate? You get an estimate of between 225 and 338 by 2029. So it's a 3 times over the next 5 years. And that's the bear case scenario. 3 times your investment return over the next 5 years on the bear case scenario. And don't expect this will happen, because 15% revenue growth for a company like AMD, this is really bad, you know. So don't expect that. Base case scenario is a 20% increase of revenue year over years up to 2029. You get a PE of about 25-35, which is quite reasonable for a growth rate of 20%. The share price will be 329 to 451. So that's mean between 3 times and 4 times your investment in the next 5 years. And that's a compounded annual growth rate between 35% to 47%. And that's probably the most realistic case that will happen. If you do 3 times to 4 times in 5 years, can you believe that? It's just a staggering amount of money you're going to make over the next 3 to 5 years. And the bull case scenario, if you get a 30% increase of revenue growth, and bear in mind that this quarter we had a 39% revenue growth between the last quarter last year, same quarter last year and this year. So having a revenue growth of 30%, if we are extremely bullish on the AI trend and AI manufacturing and AI acceleration, that 30% growth is not out of the possibilities, you know. And if you have that, then you have, of course, a PE of about 30 and 45% for a growth rate of 30%. It's quite normal and decent PE valuation. Then you will get a $500 share price to $800 share price, you know. And that's about a compounded annual growth rate of about 52% to 69%. And that will be like 5 times to 7 times to 8 times your investment in 5 years if you get the scenario of 30% growth, annual growth rate of sales, you know. I mean, overall, this is a very bullish stock. So I'm very bullish on AMD. I'm heavily invested in AMD, and I think I will continue to invest in AMD. AMD now is trading at $100 after the earnings. They didn't increase much, increased by about 7%. Now retrace back to almost 1 to 2%. So I think a lot of analysts are going to go through the numbers, crush the numbers, do a lot of discounted cash flow analysis and all the stuff that I've actually shown you right now. And they're going to go maybe some upgrade share price or not. But I wouldn't be surprised over the next quarter that AMD goes back to the $120 mark very quickly, you know. So if you look now at the share price of AMD, only 1% pre-market. And last year after the earnings, can you believe that AMD was 7% above market? Let's see what has been the latest news for AMD. Hold on, just to see if there's been some upgrade. Piper Sandler adjusted price target to AMD to 125 from 140, maintain overweight rating. So they decreased the price target after the earnings. This is crazy, you know. I don't know why Wall Street doesn't like AMD. They just decrease the price target all across the board. You know, Trust Security adjust price target on AMD to 111 from 130. Maintain a hold holding. Loop Capital adjust price target on advanced AMD to 140 from 175. Maintain a buy rating. Rough adjust price target to AMD to 125 from 140. Maintain a buy rating. And Rosenblatt maintain a buy rating. This is crazy, you know. Bank of America has an average rating overweight and mean price of 130 according to an analyst poll. So basically, all the analysts of Wall Street are slightly decreasing the price target of AMD over the next year, but they are all agreeing that the stock should be at least at 125 or above to 125. So that means over the next year, you will get a return of about 15 to 20%. If the analysts, of course, are right, but they're always reacting to, I don't know why they are so negative on AMD, you know. They have been very negative on NVIDIA, just to let you know, over the last, it's just like when NVIDIA starting to print money, they couldn't keep up with the upgrade of price target. The same with Tesla, the same with everything. The analysts, they're always playing this game, you know, of catching up, you know. I don't know why they're so bearish on AMD. And that's not news, you know. Raymond James, price target 120 from 150, maintain outperform rating. Mitsuo to 117 from 120 maintains outperform rating. So basically, they all have an outperform rating, but they are already using the price target. BNP Paribas price target on advanced micro device 250 from 190. This is crazy, This is crazy, So let's look at if they have updated forecast. You see, price target over the next year is 130. That's the average. The maximum one is 200 price target, and the lowest is 75. Current price is 98. Average is 135. Strong buy 28, buy 8 or 16, only one strong sell, Otherwise, that's pretty it for the earnings of AMD, and I wish that you have a clear understanding of why AMD is a strong investment case going forward, and why you should expect AMD to do 3 to 5 times the price of today over the next year, And if you really enjoy this type of analysis, please subscribe, like, and leave a comment. See you next one.